Did you know that in the UK, the cost of living has surged, making every pound in your traditional savings account worth less by the day? It feels like an uphill battle just to keep up, let alone get ahead. But what if you could not only beat inflation, but also create a consistent, reliable income stream that lands in your bank account every single month right here in Britain? Today, I'm pulling back the curtain to show you precisely how to build a robust portfolio of UK dividend stocks designed to pay you monthly, transforming your financial worries into a tangible passive reality. This isn't theoretical, it's a practical blueprint derived from years navigating the unique landscape of UK markets, helping everyday people unlock their financial potential. Are you constantly caught in the treadmill of the 9-to-5, barely covering bills, or perhaps dreaming of a future where your money truly works for you? For many of us, the idea of financial freedom, of passive income, seems like a distant fantasy, especially when facing volatile markets, meager savings interest, or the relentless march of inflation. You might be unsure where to even begin, which investments truly work for UK residents, or how to create something genuinely consistent without risking your hard-earned capital. It's a common struggle, feeling trapped by the present while longing for a more secure future. But it doesn't have to be. Today, we're cutting through all that noise. We'll strip away the jargon and demystify exactly what UK dividends are and how they generate income for you. We'll unveil the monthly magic of structuring your portfolio, pinpoint the most reliable UK sectors for income, and, crucially, show you the specific criteria for identifying the best, most sustainable dividend stocks. And to truly maximize your earnings, we'll reveal the tax-smart strategies using UK ISAs. By the end of this video, you'll have a clear, actionable step-by-step plan to start earning monthly passive income, taking your first confident stride towards financial independence. So, let's start by unlocking that dream. Picture this: your mobile phone bill, your weekly grocery shop, or even a nice meal out, all paid for not by your active labor, but by your investments. This is the promise of UK dividends. Unlike a second job or a demanding side hustle, dividends are essentially a share of a profitable company's earnings paid directly to you, the shareholder, for simply owning a piece of their success. It's consistent, truly passive cash flow that can either fund your current lifestyle or turbocharge your long-term wealth growth. The dream of unearned income, of your money generating more money, isn't just for the ultra-rich. It's an achievable reality for anyone in the UK willing to learn the rules of the game. Are you ready to stop trading hours for pounds and start trading smart investments for consistent income? Well done. Now, how does this unearned income actually arrive? It's time to demystify dividends. A dividend is a payment, typically a portion of a company's profits distributed to its shareholders. While some UK companies pay quarterly or semi-annually, the key is understanding their mechanics. Think of it like this. If you own shares in a utility firm that pays, say, 3p per share every 3 months, and you own 2,000 shares, you'd receive £60. Crucial to this process are specific dates, like the ex-dividend date, the cut-off point by which you must own the shares to qualify, and the payment date, when the money actually lands in your account. Understanding these terms, along with dividend yield and payout ratio, is fundamental to confidently building your income stream. But here's the real trick. How do we turn these quarterly or semi-annual payments into a consistent monthly flow? This brings us to the monthly magic, the strategic structuring of your portfolio for consistent income. Since most UK companies don't pay monthly, The secret lies in carefully selecting companies with staggered dividend payment schedules. Imagine you have a company that pays in January, April, July, and October. Then you find another that pays in February, May, August, and November, and a third paying in March, June, September, and December. Combine these and voila, you have a payment arriving every single month like clockwork. This isn't about finding rare monthly payers, it's about intelligent portfolio construction. It's like orchestrating a financial symphony, where each instrument plays its part to deliver a harmonious, regular income. Are you starting to see how achievable this truly is? But where do you even begin to look for such companies? That leads us to the top UK sectors renowned for reliable dividend income. Certain industries in the UK market are practically built for stable cash flows, making them prime hunting grounds for consistent dividend payers. We're talking about sectors like utilities, which provide essential services that people can't live without, consumer staples, meaning everyday goods we always buy, and established telecommunications companies. Some robust financial institutions also offer dependable payouts. Think about it. Whether the economy is booming or struggling, people still need electricity, water, food, and internet. This inherent stability translates into reliable earnings, even in challenging economic climates, making their dividends far more dependable than those from more volatile sectors. But simply picking a sector isn't enough. How do you identify the truly best within them, avoiding costly mistakes? This is perhaps the most crucial step, applying the right criteria for identifying the best UK dividend stocks, ensuring you don't pick the wrong ones. A high dividend yield might seem tempting, but it can be a dangerous trap. Focus instead on a sustainable dividend yield, typically one that's not excessively high, as it often signals underlying problems. Look for a strong dividend history, companies that have consistently paid and ideally grown their dividends over 5 to 10 years. Critically, examine the payout ratio. This tells you how much of its earnings a company is paying out as dividends. If it's too high, say over 80 to 90%, the dividend might be unsustainable. And always assess the company's balance sheet for overall financial health. A company with massive debt, dwindling profits, and a sky-high yield is a ticking time bomb. You're not just buying a stock, you're buying a piece of a healthy business. And once you find those healthy businesses, how do you keep more of their profits in your pocket? That's where tax-smart investing with UK ISAs comes in, a game changer for maximizing your earnings. For UK residents, the Stocks and Shares ISA is an unparalleled financial superpower. Within your annual allowance, which is £20,000 for the 2023-24 tax year, all your dividend income and any capital gains are completely tax-free. Imagine earning a significant sum in dividends. If that money sits outside an ISA, you could be paying tax on it above the dividend allowance. Inside an ISA, however, every single penny is yours to keep forever. This isn't a small perk, it's a monumental advantage that can dramatically accelerate your journey to financial freedom. Failing to utilize an ISA is like leaving free money on the table. So, what do you do with those tax-free dividends once they arrive? This leads us to turbocharging your growth through the magic of compounding with dividend reinvestment. Often called the eighth wonder of the world, compounding means reinvesting your dividends back into buying more shares of the same company or other companies. These newly acquired shares then generate even more dividends, creating a powerful exponential growth effect on both your portfolio's value and your income stream. Think of it like this. If you earn £75 in dividends and simply take the cash, that's it.
But if you use that £75 to buy additional shares, those shares immediately start working for you, generating their own dividends. Over time, this snowball effect can transform modest investments into substantial wealth and a truly life-changing income. It's the ultimate passive growth strategy. But even with the best stocks and reinvestment, how do you protect your income from unexpected wobbles? The answer is simple. Build resilience by diversifying your monthly dividend portfolio. Never ever put all your eggs in one basket. Diversification means spreading your investments across different companies and, crucially, different sectors. Why? Because if one company unexpectedly cuts its dividend due to unforeseen circumstances, the impact on your overall income stream is minimized. Instead of relying solely on, say, one major bank, aim to own shares in a couple of utility providers, a leading supermarket chain, a telecom giant, and perhaps an established pharmaceutical company. Aim for at least 8 to 12 different companies across 3 to 4 resilient UK sectors. This strategic spread reduces your overall risk and creates a far more robust, reliable and consistent income stream, ensuring your financial stability even when individual companies face headwinds. But even with diversification, there are still critical pitfalls to avoid. So let's talk about the red flags and common mistakes to avoid in dividend investing. The biggest trap is chasing unsustainably high yields, the dividend trap. If a stock offers a 12% yield when the market average is 4%, dig deeper.
Often, this signals a company in distress, massive debt, or dwindling profits, making a dividend cut almost inevitable. Ignoring a company's debt levels is another huge mistake. High debt can cripple a company's ability to pay consistent dividends. And failing to review your portfolio regularly means you might miss early warning signs like consistent revenue declines or significant management instability. Always perform thorough due diligence. Remember, a high yield means nothing if the underlying business is crumbling. Protecting your capital is just as important as generating income. Now, are you ready to take action and start this journey? This brings us to your concrete, step-by-step action plan to start earning monthly income today. No more excuses, no more waiting. First, educate. Re-watch this video, delve deeper into the sectors we discussed, and consume more quality information on UK dividend investing. Second, goal. Set a realistic, achievable monthly income goal. Whether it's £50 or £500, having a target provides motivation. Third, account. If you haven't already, open a stocks and shares ISA with a reputable UK broker. This is your tax-free growth engine. Fourth, research. Select your first 3 to 5 diversified UK dividend stocks based on the rigorous criteria we covered: sustainable yield, strong history, healthy payout ratio. Fifth, invest. Start with what you can comfortably afford. Even small regular contributions compound significantly over time. Consistency is key. And finally, reinvest. Set up dividend reinvestment with your broker or manually reinvest your dividends as soon as they hit your account. This is how you truly accelerate your growth. Every single day you hesitate is a day your money isn't working for you. Imagine the incredible freedom, the undeniable peace of mind that comes from knowing your essential bills are covered not just by your job, but by your wisely chosen investments. This isn't about getting rich overnight. It's about diligently building lasting financial security and cultivating true independence, one consistent dividend payment at a time. Remember, consistent action, even seemingly insignificant small steps taken repeatedly, inevitably leads to monumental, life-changing results.
Your future self will undoubtedly thank you for starting today. If this comprehensive guide to navigating UK dividend stocks has genuinely opened your eyes to new possibilities and, crucially, given you the confidence and the blueprint to start, please take a moment to hit that like button right now. It truly helps this content reach more people who need it. Subscribe for more powerful, actionable investing strategies tailored for the UK market. And tell me in the comments below, which specific UK dividend sector are you most excited to research first after watching this video? I personally read every single comment. The journey to building a consistent monthly passive income stream
with UK dividends is not just a distant dream. It is an entirely achievable reality waiting for you. You now possess the blueprint, the essential knowledge, and a clear step-by-step action plan to begin. Take that crucial first step. Remain consistent in your approach and watch with amazement as your financial future progressively transforms before your very eyes. Remember, all investments carry inherent risks, and past performance is no guarantee of future returns. Always consider your own financial situation and goals before making any investment decisions. Until next time, keep investing smart, stay resilient, and live free.